Welcome to The Tax Factor, the top 20 business and investment podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Nimesh, Shah and Roger Holman.
I'm Nimesh, Shah, CEO of Blick Rothenberg.
And I'm Roger Holman.
Roger, I've been out of the country for a couple of weeks and I might have missed a few things. Could you help me out a bit? What did I miss whilst I was away?
Well, Man United sacked another manager.
I was looking for a bit more. Anything else?
Greggs have launched their Christmas menu again.
It's probably a bit too early to be talking about Christmas at the start of November. So is this going towards another VAT story about pasties?
Well, if you really want to talk about tax, then I suppose there has been a budget in the UK and some sort of election happened over the other side of the Atlantic.
I've teed you up nicely for that, Roger, because of course I did watch the budget from my hotel room, albeit I was 8 hours ahead of time so people can work out where I was, much to the annoyance of my wife, who could hear Rachel Reeves coming through my headphones, but probably not as annoyed as maybe family business owners or farmers, I suspect. Lots to talk about in terms of the backlash from the budget that we've seen this week. Let's unpack some of this, Roger. There hasn't actually been too much in the world of tax other than the autumn budget. And every day there's been some story in the national newspapers about this group being annoyed. This is going to decimate UK business. The UK is not going to be as attractive anymore because of those tax rises. I thought it'd be useful. Maybe we can cover off some of those angles and some quite amusing stories coming out of the woodwork here.
Yeah, I mean, if we start off with the farmers, because I think they're planning a bit of a march on Downing Street, aren't they? If it was French farmers, maybe they'd be bringing their manure with them. Thankfully, they probably have a bit more decorum with our British sensibilities. But the big thing around farmers is the change to the business and agricultural reliefs that they currently enjoy. The main situation with farmers is if you're on a working farm, you'll get 100% relief from inheritance tax on all of your interests in your farm. And that actually includes your farmhouse in most circumstances. So typically a farmer would pass their assets down to the next generation and there'd be no inheritance tax. Now, this made for quite nice little wheezes for people that just got a load of cash from a big sale of something and invested in a lot of farmland. One of those people, obviously, Jeremy Clarkson. So the changes that are coming through are, instead of the relief being 100% from inheritance tax, we're capping the lifetime amount of relief that you can get for business or agricultural property to £1 million per person. Any excess over that is then going to be charged at 50% of the IHT rate. So a typical example is going to be where you've got spouses who own a farm together. Well, in that case, with a bit of clever planning, you can get £2 million tax-free and pay 20% on the balance. Now, that's significantly worse than the current position, but it's not the end of the world, I would say. If we go back to Jeremy Clarkson, apparently his farm is 1,000 acres, and the average price of farmland is around 11 grand an acre. So his farm is worth £11 million. If he marries his partner and they do a bit of decent planning, they can only pay £1.8 million on that farmland. Rather, that's their estates, their heirs would pay that. And that can be paid over 10 years. So actually, probably not the end of the world.
Yeah, I suppose thinking about the feedback from the autumn budget, it does feel like people don't really understand how these new provisions on agricultural property relief, business property relief are going to work in practice. And I think you've articulated an example there on Jeremy Clarkson's farm. I suppose actually I've been watching some of the Diddley Squat Farm series over the last few months, and it does feel like he's getting into his farming. So I'm not quite sure if this was a wheeze to get some tax relief on Jeremy Clarkson's part. But there was also a phone call that was made into the Laura Koonsberg show when I came back from my flight on Sunday morning. That's obviously the first thing I do, switch on BBC One and watch Laura. And there was a farmer on there saying that he thinks that his estate is going to be subject to £1 million inheritance tax bill. And I quickly worked out that he must have a farm estate worth 8 million. I'm not quite sure that was right. And I think there's probably a big misunderstanding as to how many estates are going to be exposed to this change on agricultural property relief. But it's a great story, I suppose, for the press that we've got these farmers marching down Whitehall saying that they're going to be clobbered for this new new tax. I would say that they shouldn't have been surprised that these changes were going to happen, because there's been constant review, consultation around these reliefs. They do cost the government a fair amount of money, and there was going to be a change at some point. It was probably one of the few changes that wasn't heavily rumoured in the run-up to the budget. And I think what we've ended up with in the example you've given, Roger, where you can get this £1 million tax-free amount on qualifying assets, and you can circulate that amongst the family, so you could double up or even quadruple up across a family of 4. The exposure isn't going to be as much as maybe people think it is. And there was a stat out there that I read that only about a quarter of farms are going to be affected by this. The bit that strikes me, though, is the headlines have all been about the farmers, because I suppose the country can maybe relate to farmers and the protests that are going to ensue and food shortages on the shelves. So it's all very dramatised. But I think the real population here is family businesses. And I know that Family Business UK, a group of family businesses that have come together, have lobbied quite hard about this change that's happened. Now, one of those people happens to be the prisons minister who was brought into Keir Starmer's cabinet, James Timpson, Britain's most famous cobbler. And I wonder what James had to say to Keir Starmer. I wonder if he was expecting this, because Timpson's a family-owned business up in the north. James Timpson is the CEO of that business. I wonder if he knew anything about those changes and what the reaction might have been over a cup of coffee with Keir Starmer on the day after the budget.
Yeah, I mean, it does make for interesting thoughts around these things. But I think ultimately it's just going to mean a bit more planning will need to be put in place for these people. So instead of the simple fact of saying to typically the father, I'll just hold on to your shares until you die and then you give them away tax-free and it doesn't matter, it might encourage a bit of earlier transitioning into the next generation.
I think that's right. There are reliefs available for capital gains tax on holding over gains, where you can gift shares in a trading company. So a bit of lifetime planning around transferring the family business, I think, will become more popular. And we should also remember these changes aren't coming in until 2026. I've seen some hilarious social media posts, again, around the outcry of these changes, because I think people haven't quite got their heads around them. But someone saying that the only advice I can give myself is to die before 2026. That sounds pretty extreme, but that is the reality, that those changes don't come in before that point. I'll be watching with absolute fascination as to the lobbying and where this may go, and whether there will be any changes before 2026 to these rules, because I've never seen such outcry on a relatively small measure. It doesn't raise that much money. That many estates aren't affected by it, but it does seem to have dominated the headlines in terms of the fallout from the autumn budget. But actually, the biggest thing here in the autumn budget was the national insurance increases on businesses by 1.2%. I did read an article earlier today, Roger, that Primark are assessing their options about more investment in the UK because of the impact of the 1.2% national insurance increase and what that's going to do to their wage bill. They made about £1 billion worth of profit, so the increase in their payroll cost is going to be relatively modest, and I'm sure they'll work out some way through lower wages or stricter hiring decisions about how they might absorb that cost. But I don't think this story on APR and BPR, it doesn't seem like it's going away anytime soon, and there are some pretty influential lobbying groups out there that are manoeuvring right now as we speak, and I'm sure we're going to cover more of this in future episodes of The Tax Factor. Let's move on to another area of the autumn budget that caught my eye, and I suppose, again, this wasn't any great surprise that VAT on private school fees are confirmed to go ahead from January 2025. But Roger, again, there's more action around this particular policy from the independent schools councils. What are they up to, and do they really think they're going to force through a change on this?
What they're doing is actually taking a case to the European Court of Human Rights, as if VAT on private school fees is against someone's human rights. And to be honest, I think it's probably more of a publicity stunt than really actually being something that's going to change the position.
Yeah, it does feel like a bit of wishful thinking from the Independent Schools Commission. But again, it's gained a bit of momentum in the press. A number of families have got behind this. I think it will take some going. I can't think off the top of my head, Roger, about any tax case at the European Court of Human Rights that's ever gone through successfully. I think there will be one in the future. I'm not sure it's going to be VAT on private schools school fees. So again, I think those families that have got children in private schools are going to have to suffer that 20% increased VAT cost from January next year. And then I do want to touch on capital gains tax as well. And I suppose this is my own musings and reflections. I always say to clients, don't plan with the crystal ball, don't plan with speculation, have the facts in front of you and then take action. I got pushed a lot by clients and contacts saying, Nimesh, what do you think? Where do you think CGT may go? And I said, well, I think it was probably going to go somewhere between 25 and 30%. I was not a million miles off, but I was wrong. It's actually only 24%, the top rate of CGT. So I was only a percent off, and it was only 4% higher than the 20% rate, albeit it was an immediate change overnight. I wonder whether those people that have crystallized big transactions, big gains in the run-up to the autumn budget, thinking the rate might double or might be aligned to income tax, I wonder if they're thinking now whether they should have done that or not. Have you had any thoughts or any feedback about, is anyone regretting the action that they took, I suppose, in the run-up to the autumn budget around CGT?
I think ultimately most of the race to get things done were on transactions that were happening anyway. So it was really trying to accelerate those transactions and get them through before the budget. Now, it may be that some of the sellers have taken a bit of a haircut on some of the valuations that they were looking for, or perhaps they've taken tighter controls over what they can do in the future so that they can get the sale through. So those clients, those people will have had a bit of seller's remorse in this case, rather than buyer's remorse.
Yeah, and I did see some horse trading going on valuations of businesses, and in the run-up to the autumn budget, buyers using scare tactics to say, well, we're only going to pay you this much, and sellers almost having to be forced to sell their business because they were so worried about CGT going up. The other side of this was that I saw that the Times reported that $1 billion of funds was sold in the weeks before the budget. Again, that behavioural response around people trying to beat the tax man, trying to beat an expected capital gains tax rise. And as I said, I'm not sure it was necessarily worth it for a 4% increase. And I'll be fascinated again to see what that has done to CGT receipts in the next self-assessment cycle. But we're not going to know until after January 2026. So we've got a bit of time to wait before those stats come out. One of the things I did spot, though, on CGT is cryptocurrency. There's going to be more regulation and more transparency around cryptocurrency and those platforms having to share more trading data over the next 18 months. So I expect that we'll see more HMRC inquiries on individuals selling cryptocurrency and not declaring the gains. It's been a bit of an opaque world. I suspect that HMRC are going to get more revenue through that data exchange. They will do through a 4% increase in the CGT rate. Think then ahead, Roger, my immediate reflections on the autumn budget, whilst I say I was sat there in my hotel room, was, wow, that doesn't seem so bad with all the mad speculation that we had. And I've never seen such wild speculation on a budget in the 20 years or so that I've been doing this. It was absolutely bonkers. At the end of it, I thought, actually, there wasn't huge cataclysmic changes here. They were quite targeted. And yes, we know the family businesses and the farmers are annoyed. Also, people with large pension pots as well, they'll be slightly aggrieved as well with inheritance tax coming in. But that's not going to come in until 2027. And there's a lot of detail that needs to be worked through there. Where do you think this might go? Because again, there's wild stories of 85% effective rate of tax on pension pots going forward, but surely it can't be that high, can it?
Well, it's the interaction between inheritance tax and income tax as far as pensions are concerned. What we've got there is a strange position at the moment where if you take money out of a pension, obviously you pay income tax on that money. If the pension is inherited, at the moment, it's inheritance tax free. Now, interestingly, among all the people that I've been speaking to, no one seemed to realise that only came in 2014. So we've only had inheritance tax free pensions for 10 years. I think we've had pensions for a lot longer than that. But it is that double taxation, and I would really expect through the consultation process, we've got 2 years to deal with this, that there will be some sort of relaxation on that. So either there'll be some credit for the inheritance tax that's paid, or you'll pay one or the other.
So if I try and summarise the over-hour autumn budget statement from Rachel Reeves, it was a bit of CGT, some targeted stuff on inheritance tax, pensions, and the big one was national insurance. And we always knew that non-doms were going to get hit, and largely those rules stayed the same from the spring budget. There wasn't much more in there. But for me, I was listening very carefully to Keir Starmer and Rachel Reeves' comments immediately following the budget. It didn't feel like like this story on tax increases is over. It felt like, yes, the story on taxes on working people, in inverted commas, that's done. The big stuff maybe is done, but I think that there's still more to go on capital taxes. And maybe if they had more time between the election and the budget itself, we might have seen more dramatic reform around this. Not that I want to create another frenzy of speculation, Roger, but immediate thoughts on what you think might happen this time next year. Maybe it's nothing.
I mean, it could be nothing. What I wouldn't be surprised at is if we have another couple of percentage points on CGT. A few more fiddlings around the edges of IHT. It doesn't feel like we've got a very brave government at the moment. They don't feel like they're in for wholesale reforms of capital taxes, which is something that I would be really in favour of, making it simpler and a much more comprehensive system, a single capital tax.
Couldn't agree more with you, Roger. I think Heather said this last week. It was a missed opportunity. I really hope that isn't the case. I really hope that Rachel Reeves grows in confidence and has the confidence to go and really reform capital taxes, because they are a mess. CGT alone is a mess. There are 5 rates that are going to apply from next April, and all sorts of weird and wonderful different timing points now, with immediate changes and business asset disposal relief changing at different times. We haven't got time to talk about all those things. It's a real headspin around it, but I really hope that someone does have a proper look at it. I like your point that, yeah, the government maybe isn't as brave as it should be, but across the pond, we might have a much braver new administration, because, a spoiler alert, yes, we record this podcast on a Wednesday immediately following the US elections, and we have a new president in place when we're recording this right now. So immediate thoughts, Roger, on what might happen on US taxes. I know you've been chatting to some of our US UK colleagues following the election, and following a late night for them probably as well.
Yes, certainly. It's looking like there'll be a lot of changes in US taxes. Generally, for the better, according to our US business tax specialists. They're expecting a lower rate of corporate tax, fewer regulations. They are expecting a bit of a tightening on immigration. That was one of Trump's big promises as he was going into the election. And it's interesting you mentioned the UK is getting tougher on cryptocurrencies when Mr. Trump is deciding to get a lot looser.
Yeah, I did notice the price of Bitcoin skyrocketed on the news that Donald Trump became president of the United States. Again, it'll be interesting to see what the US does. Sometimes what the US does, the UK tends to follow thereafter. But there is a bit of a divide between where the UK is right now in its government and where I suspect Donald Trump will take taxes. But we might have a new force against Rachel Reeves, because Kemi Badenoch, now leader of the opposition, she's been shuffling the shadow cabinet around, and we have a new shadow chancellor. I've lost track of how many chancellors we've had in the Conservative world over the last couple of years, but Mel Stride has got the job. What do you know about Mel Stride, Roger, and what do you think we should expect from him?
Well, honestly, I don't know a lot about Mel Stride. He's quite a well-known politician, but I don't know his views on tax. But if the views of Kemi Badenoch and the Conservative Party are to go by, then it looks like they will be aiming for much more business-friendly policies and, strangely, a higher growth agenda, which apparently was what we were meant to be getting under Labour.
Yeah, that's right. I think Mel Stride is a seasoned politician. He's been round for a long time. But no, I don't, like you, Roger, I don't know too much about his views on tax. And I'll be interested to see how he comes up against Rachel Reeves. I think Jeremy Hunt did an okay job in the time that he was Chancellor. Rishi Sunak had some very strong words to say, actually, immediately following the budget statement the other week. And it'd be interesting to see what Mel Stride's views are on the budget as that sort of outcry, that backlash from the autumn budget continues.
The Tax Factor from Blick Rothenberg.
That is all we have time for on this sort of budget reflections episode of The Tax Factor. It's time to wrap up and see what Greggs have to offer on their Christmas menu. For more budget insight and analysis, visit the Blick Rothenberg website. There's a mountain of content on there around the budget issues. If you missed it last week, you can hear Heather Self and Robert Salter giving their immediate reaction to the Tax Factor budget. And you can check your own finances with our very famous Blick Rothenberg Rothenberg calculator. At last count, over 20 million of you have used the calculator. I'm one of those 20 million. I like an occasional real ale, and the calculator tells me I'll be £1.51 better off per year as a result of Rachel Reeves's budget. Thank you very much, Rachel. I'll leave it to you to work out how many pints of beer that is per week.
We release a new episode of The Tax Factor every Friday on the Blick Rothenberg website and all the usual podcast platforms, so you can go and listen wherever's most convenient. We record and release them in less than 24 hours, so you always get the latest news and updates. If you enjoyed the podcast, please subscribe and give us a rating or review.
Thank you for listening to this week's episode of The Tax Factor. Goodbye and have a great weekend.
Goodbye.
That's The Tax Factor. We'd like to thank you for making us one of the UK's top 20 podcasts. Find all our previous episodes wherever you get your podcasts. And join us again next time on The Tax Factor.